Are you buying what everyone's trying to sell, like Chesapeake assets in Louisiana, like any smaller mid company?
It's a big difference between oil and gas.
Okay.
The oil situation is in much better shape, supply and demand. I also think that the amount of capital available in the oil patch is disappearing. I mean, I compared it recently to the real estate industry in the early 90s, where you had empty buildings all over the place and nobody had cash to play. That's very much what we're seeing today, and we're seeing deals in the oil patch that are dramatically better for the investor than anything we've seen in the last 10 years. In the gas space, a lot depends on where. In other words, anything that approaches the Marcellus is weak and weaker. Pricing is, everybody keeps talking about gas being $3, and meanwhile, gas keeps going closer to $2 than $3. There's an awful lot of supply. Some of the things happening worldwide in Ling, which was going to be the savior of gas.
LNG for
LNG,
the cooler kids, yeah.
We're seeing, just the fact that the Russians got the second pipeline approved last week means that an awful lot of gas is going to come into Europe non-Ling form. And so I think you got to separate oil from gas. I'd say gas and gas assets are a lot less attractive than oil assets.
Speaking of oil and gas M&A here, Citigroup has been on Occidental, for example. They just said they want to sell $15 billion worth of assets. You have Carl Icahn saying that would be a fire sale. Leon, what's your outlook here on what's possible in this market?
Again, not commenting on Occidental and Carl and their asset sales, I think our outlook for the market is actually relatively benign right now. So if you look at it here from the standpoint of energy pricing right now, especially on the oil side, with plus or minus 60, I'm rounding depending on whether you're talking about Texas or not. The fact of the matter is our outlook does not look like there's huge amount of pressure. What you are seeing, on the other hand, is in certain cases, rigs being taken down. If cost bases are too high from a drilling standpoint, people are taking down rigs and effectively running for cash and preserving capital. So that really ties into Sam's point. People are trying to be careful and ensure that they have the cash flow to be able to get through this period, especially if their cost basis is too high.
And you got to remember that the oil business has a very unique lease feature, and that is people get leases and then they're obligated to drill. And we have a lot of situations we're seeing where companies have invested a lot of money in leases, don't have the money to drill, and are selling existing flows of cash flow in order to get capital, not to lose leases.
So, Sam, are you buying any distressed assets?
Yes.
Where?
California, Colorado, Texas, so far.
Do they come from the distressed players like a Chesapeake, or are they smaller than that?
No, interestingly enough, our experience so far anyway, what we're seeing are situations where companies are taking steps in anticipation of problems rather than responding to problems.
So you're buying assets from companies before it gets too bad?
Yeah.
Are they selling at fire sale prices?
Yes.
Can you give me a more specific example of the type of companies that you're buying from? Are you buying oil or gas assets?
Oil.
Just shale or broader array?
Broader array.
This is like 20 questions.
I know. It is.
I'm answering every one of them.
It's part of the show.
Eventually, you'll narrow it down.
And then from that point, you also created Alpine Energy Capital with Tom Barrack. So basically, you're trying to fill the gap of where companies can't get money.
Well, that was the deal where the seller in that was a big company, not in trouble, but not
getting ahead of it,
terribly liquid, and therefore looking for ways to, in effect, get somebody else to put up the money to keep the game going.
Who do you lend money to?
I don't lend money to anybody. I buy assets.